To the markets now, where you wouldn't think Greece was on the verge of default and the Fed signalling the end of zero interest rates. The ASX was up 1% by late morning, and that's where it finished, with banks and miners up strongly. The Australian dollar's down against all the major currencies. And Martin Lakos from Macquarie Private Wealth joins me now for more. Martin, Woolies first. My goodness, investors welcoming the news that Grant O'Brien was quitting.
Well, certainly the market reacted initially positively, Tiki, with the stock rallying 76 cents or nearly 2.8%. But in fact, it closed down 4 cents towards the end of the day's trade. I think to some extent the commentary certainly was that there was some speculation that Grant O'Brien may leave Woolworths after this transformation project was complete, had been executed. They did continue to confirm that they've taken $500 million of costs out of the business, which they'll reinvest back into pricing. And that's certainly part of the overall strategy. But as you said in your previous program, Tiki, the sales at food and liquor are disappointing, down 0.7%. The general merchandise was down 13%, although they continue to focus on the systems there. And of course, we did see a pretty solid rise in hardware as a result of store rollout, up about 20%.
Well, to the broader market today, and why the rally when a potential Greek default seems to be looming?
Yeah, it does appear that the markets are a little bit volatile here. As you remember, we saw the German market down quite heavily over the last 2 or 3 nights. We closed up about 1%, 59 points. The bank sector really carried that. If you look at, in fact, the big 4 banks, BHP and Telstra, they spoke for 37 of the 59-point rise today. So very much concentrated there. It does appear both the Buffett effect, with Warren Buffett possibly coming in as an investor into the Australian market, but also we did see that analysts have raised the banks again, having seen them fall 13%, that valuations are starting to look a little more interesting. We also saw the energy space up of about 1.5% in our time zone.
Another big headwind, though, is the US Fed and the timing of this US interest rate the rise sometime this year. We're hearing from Fed leader Janet Yellen overnight tonight.
Yes, indeed. We'll get more commentary out of Janet Yellen. There's certainly some degree of necessity for the markets to feel they understand where the Fed is going. And most analysts now have pushed their expectations of a rate rise in the US towards September now, but looking for more colour. No expectations of any real announcement of rate rises tonight. But the other headwind, of course, we talked about Greece, Tiki, and it is interesting to see that it's certainly our view of the gap between where EU policymakers and the Greek government are. We're unlikely to see a definitive agreement, but it may well be just a deferral going forward. But the markets may not be too comfortable with that, and we think the markets are underestimating the possibility of a Grexit in terms of risk, and we're certainly seeing that being reflected in bond yields, with bond yields now rising, which is sort of going against the trend in terms of where you would think that quantitative easing would push yields, when in fact should push yields lower.
Martin Lakos, thank you very much for all that.
Thanks, Tiki.